All right, let's jump right into this breakdown of how financial planning actually changes as wealth grows. We're going to look at exactly how the rules of the game shift as your net worth scales up.
So here's a really interesting question to kick us off. Financial planning at 1 crore looks completely different from planning at 50 crore. But why? Well, there's actually this massive information gap between accumulating your first crore and figuring out how to steward 50. Because it's not just about having more money, right? It's a fundamental shift in how that money behaves and honestly what threatens it.
Let's start at the beginning, building wealth. This early phase is all about offense. Your focus is sharp, it's simple. Maximize your active income, maintain super disciplined savings, and drive that basic cash flow straight into investments. It's the classic straightforward formula for compounding.
But as that wealth really starts to grow, your priorities have to expand. The goal shifts from speculative compounding to, well, plain defense. You're suddenly hyper-focused on wealth preservation, tax efficiency, risk management, and diversification. You're basically building a moat to protect your capital from heavy tax drag, which, trust me, can eat up a massive portion of your returns, and everyday market volatility.
And to really protect that wealth, the complexity ramps up. You aren't just buying simple index funds anymore. You're looking at things like formalized estate planning and family governance, which is literally just setting the ground rules for how your family handles money. Plus, you're exploring geographic and currency diversification to hedge against single-country risks and drawing up strict investment policies.
Now, as wealth moves across generations, succession planning and family governance become increasingly important. That right there is a massive pivot point. Suddenly, your financial horizon extends way, way beyond your own lifetime. You're no longer just planning for your own retirement, you're literally planning for your great-grandchildren.
To actually pull off that kind of multi-generational legacy, the toolkit completely transforms. Simple wills just don't cut it anymore. They get supplemented by private family trusts to protect and smoothly transfer those assets. You're creating family constitutions for succession and decision-making, investing in next-generation education so your heirs actually know what to do, and turning ad hoc donations into structured philanthropy, like Section 8 companies, for a lasting impact.
When you put them side by side, the contrast is kind of mind-blowing. Someone building their first crore is entirely growth-focused, using public index funds, FDs, and hunting for basic tax deductions. But a family managing 50 crore, they are hyper-focused on preservation. They're using alternative investment funds, portfolio management services, private equity, and structuring their wealth through HUFs or LLPs for tax arbitrage. It's a complete evolution from retail simplicity to institutional-grade complexity.
If there is just one thing you take away from this entire breakdown, let it be this right here. Building wealth requires a strategy, but preserving and transferring it, that requires a full-blown system.
Build, protect, manage, transfer. That is the ultimate mandate for anyone trying to scale and secure a financial legacy across generations. So, what kind of system are you building for your wealth?
Just a quick note before we wrap up. This breakdown is strictly for educational purposes and doesn't constitute financial, tax, or legal advice. Thanks so much for joining me, and keep learning.